We've already talked about the fact that the career, or even hobby for that matter, of trading, whether it's Forex, stocks, commodities, futures, or some other market, all have very high failure rates. And even of those who don't fail out, very few to go on to become consistently profitable traders. In this market, listen to me, you will have more people who spend time studying from someone, then learn what that mentor or guru teaches, then they will try to trade and don't do so hot. So they start teaching what they learn and selling hope to other people for a strategy they can talk about, but they can't actually support themselves by trading it. The market is flooded. And when I say, I've never seen another industry so flooded in this way, but it's out there. And so these people figure out that they can make money by teaching, and that's what they do. And so I'm telling you, one, to be careful, and two, that this industry is filled with way more marketers than traders. And I think that a really big reason for that is that they do not have a fully fleshed out strategy and trading plan. They just find someone on YouTube talking about seeing the market in a certain way, and they watch a quick demonstration and they realize that they can see the market that way too, and then they get excited and they just start trading it. They don't ever really back test it to see if it actually works in all market conditions, and even worse, not even realize that over half of the quote unquote strategy is missing. What most people, even traders who sometimes have learned from a mentor and are trading just an idea or a market theory rather than a fully fleshed out set of rules that protect your capital and teach you how to ride the waves of the market, keeping your head above water and making money while you do it. If you do not commit and take the time to do everything I cover in this chapter, I'm never negative, but I will go ahead and say that you should probably just stop now. Don't waste your time. Don't waste your money. You need a fully fleshed strategy that is keyed to your personal personality and your personal money psychology. There is no shortcut. You have to go through the process, and it is going to take time and effort. There is no magic pill in learning Forex trading. Nobody can hand it 100% to you. There are aspects that you must travel for yourself. And in this industry, laziness is a curse. You must commit to yourself to have discipline, and you have to take initiative. You have to seek out knowledge, spend time in the charts, dive in over and over and over again. Trading is a solo journey, and no one else can do it for you. No one is looking over your shoulders, making you do it. And I'm telling you, it will absolutely show your commitment, strength, and determination, and uncover many core parts about yourself. It will, in equal measure, humble you and give you great personal pride and satisfaction as you journey to become a consistently profitable trader. This unit on strategy and the next unit after this one on back testing are the parts that most traders fail to do. They might hear about it, but they never really take the time to do it because they are too eager to make money, too seduced by the Instagram and YouTube trading marketers, and they're rushing to get into the market to make their millions, or at least to relieve some amounts of the personal suffering that they're experiencing at the moment. But if 90% of the traders fail in entering Forex trading, and 89% of those 90% of them are trading with the same mediocre or just plain bad trading basics, and none of them have a fully fleshed out strategy and trading plan, and probably have only spent a total of maybe 15 hours back testing their bad plan, what does that tell you? it tells you that they have some things in common and for you not to be one of those people. So we want you to do it right. Pay attention to this unit. Get the handbook. Take notes. Go back and make sure that you have checked all the boxes and have everything in place. You will be over halfway there to getting the keys to the kingdom by just dedicating the time and the brain power and the energy and tackling the emotional challenges here at the front at the beginning of your journey. Then listen, down the road, I'm telling you, you can create the life of your dreams, allowing the Forex market to be the vehicle to take you there. You can relax and just execute the same trades with the same setups over and over again. You can eventually get to the point where you pick your time to work, and then you're living life much more on your terms. You're reaching the goals that you dream about now. But I'm telling you, you're not going to get there easily. There's not a magic pill, or some shortcut in trading Forex. But I started this journey knowing that part of mine would be helping others reach their goals and get there too. So let's start unlocking that path for you now by looking at an overview of the parts of a complete trading strategy before we dive deep into each one. First, we are looking at analysis. And this is where we're going to set procedures in place that we will repeat usually at the beginning of every trading day, determining one, first, if a pair is tradable at that moment, and two, if we are ultimately looking for buys or sells. Now, after we have determined that a pair meets our criteria for tradability and is suitable for looking for possible opportunities for entry, then we go down our checklist of confluences or agreements that would either put us in a trade or keep us out of a trade. Most traders spend the majority of their time on this step, watching potential setups happen, which they either get their entry signal to open up a trade for, or they wait for the next opportunity because they didn't get a full signal. We also have rules here that cover if we're already in a position and see that our trade is really moving with momentum in our direction and we want to enter more positions or scale larger into an already running trade. This would be where we also have rules set up for that. These are called continuation entries, and you also want to have a specific set of rules for these types of entries so that you could get in if you wanted, or even more so that it would keep you out and save you from a potential loss where you shouldn't be adding additional positions. Next, you have your trade management. Most of this you will already have worked out and have a standard practice in place for. But with the trade management, once you are in a trade and you are setting your take profit levels, you need to know what these are right off the bat. We are never to go off of our feeling, what you feel the market might do. We're to go off tested and proven statistics and probabilities. You also want to have levels where you scale out of a trade, meaning you take a percentage of your profit off the table and put that in your pocket while letting the rest of the trade run. You also have rules in place that really fall under trade management, but that really handle position sizing and risk management that sometimes will dictate if your entry is valid or even worth it or not. And finally, under trade management, you have rules that dictate how to manage your drawdown, or simply put, how to lose less. Your stop loss is one of the number one rules when placing trades. That is, never ever enter a trade without a stop loss. You may think that you are able to sit there and manage a trade so a stop loss isn't necessary, but the market can plunge 200 pips in seconds. So even if you put a huge stop loss in, put one in. But in most strategies, you have stop loss sizes that will affect your risk to reward that we mentioned in the previous section of trade management, but also what type of stop loss you choose to have during your trade, whether it's a static stop loss or whether it's trailing at a set number of pips, or if your stop loss is dictated by structure. Those type of rules would be held here. And finally, a complete strategy also has a complete set of exit rules. And this is where you have tested and written out with all nuances what you determine is your exit signal. This could be an indicator, candlestick pattern, price action structure, or something else, but you need a determined set of rules and practices that you follow every time that is not up to your emotions, but is proven and tested to keep you in profit. All of this is folded into a trading plan that encompasses a profitable strategy and will give you the framework to execute trades over and over again without variation that will result in increased capital over time.